All right, let's dive right in. If you're prepping for that NMLS SAFE exam, there's one topic you absolutely cannot skip: the MAP rule. You'll also see it called Regulation N. And trust me, knowing this stuff is make or break. So let's break it down. So here's how we're going to tackle this. First, we'll look at the backstory, why these rules are even a thing. Then we'll get to know the MAP rule itself. After that, we're hitting the most important part for your test: what you're not allowed to do in ads. We'll link it all back to the SAFE Act and finish up with a quick cheat sheet of the top things to remember for exam day. Sound good? Okay, first up, the backstory. And believe me, this isn't just boring history. When you get the why behind a rule, remembering the what becomes a whole lot easier. So, before we jump into the nitty-gritty, let me ask you this. What do you think is the #1 rule in mortgage advertising? I mean, if you had to boil it all down to just one thing, what would it be? Think about it for a second. Well, the answer really goes back to 2008. Remember the mortgage crisis? Yeah, that whole mess uncovered some really shady practices in the industry. So Congress stepped in and passed the SAFE Act. That's the whole reason you're studying for this license, right? And out of that came the MAP rule. It's basically the official rulebook to make sure advertising is fair. So the big thing to get here is that these rules aren't just out of thin air. They were created for a very, very good reason. Okay, so that's the why. Now let's get to the what. Let's officially meet the MAP rule, the rulebook for playing fair when it comes to ads. All right, this is huge for the exam, so listen up. The MAP rule, which stands for Mortgage Acts and Practices, is also known as Regulation N. You will, I almost guarantee it, see a question on the test that connects those two names. And its whole job? It's simple: to stop misleading ads for mortgage products. That's it. So, what kind of stuff does this rule cover? It applies to what's called a mortgage credit product. And that's a really broad term. It basically means any loan that's secured by a piece of property, like a house, and is for personal use, for you, your family, your household. This is exactly the kind of loan you'll be working with as an MLO. Okay, here we go. Section 3. If you're going to zone in on one part of this, this is it. We're about to walk through the exact things you can't do in an ad. These are the things that will, without a doubt, pop up on your SAFE exam. This is the core of it all. We can really boil all these no-nos down into 3 big rules. And rule #1 is super straightforward. Just be honest about the costs. And the rule gets really specific here. You can't fudge the numbers on the interest rate or the APR. You can't lie about fees, not the amount, not even if they exist. Saying no fees when there are some, that's a massive no-no. Same thing for prepayment penalties, or the price of extra stuff you sell with a loan. And here's a big one you'll see on the test. You have to be clear about whether taxes and insurance are baked into that monthly payment you're advertising. Every single one of these bullets is a potential exam question waiting to happen. All right, that was cost. Rule #2 is all about being super clear on the loan terms. So this isn't just about the money. It's about how the loan actually works. So what kind of deceptive talk are we looking for? Well, here's a classic one for the test. You can't, under any circumstances, call a variable rate loan fixed. That's a huge one. You also can't make confusing comparisons between payments or say a loan is fully amortizing when, there's a giant balloon payment at the end. And of course, you can't be sneaky about when payments are due or what might cause someone to default. And that brings us to our third and final big rule. Be truthful. Be truthful about who you are, and be truthful about how special products, like reverse mortgages, really work. Okay, really pay attention to these because they love to ask about them. A huge one is faking an affiliation with the government. Making your ad look like it came from the FHA or the VA. Total violation. Then there's reverse mortgages. You can't mislead people about how long they get to stay in their house. And you can't make crazy promises, like saying a loan will magically solve all their debt, or lie about the qualifications of the counselors you're offering. It all comes down to trust. All right, so we've covered the rules. Now let's tie this all back to what matters to you right now: passing that exam and getting your license. So, you've got to do those 20 hours of education and pass the big exam, right? Well, this MAP rule we've been talking about, it's not just some random topic. It's a huge piece of the federal law and ethics requirements you have to meet. Look at how this all fits together. Those 3 hours of federal law you need, the MAP rule, Reg N, is a big chunk of it. Those 3 hours of ethics, well, lying in an ad is pretty much the definition of unethical. And getting that 75% or higher on the test, you better believe you're going to see questions on everything we just talked about. See, it's all connected. All right, let's bring it all home. This is our final section, the absolute top takeaways. Think of this as your last-minute cram session, the cheat sheet you can run through in your head right before you walk in to take the test. Okay, let's drill these 4 points into your brain. First, the name. MAP rule is Regulation N. They're the same thing. Got it? Second, the scope. It's all about ads for mortgage products for personal use. Third, the main idea. The whole point is to stop deception about costs, terms, and who you are. And fourth, the ethics connection. Lying in ads is a huge ethical foul under the SAFE Act. That's it. That's the core. So I'll leave you with a little challenge. Now that you know all this, start looking around. Check out mortgage ads you see online or in the mail. Can you spot one that feels off? Maybe one that screams fixed rate a little too loudly? Or promises no fees when it just seems too good to be true? Start thinking like a regulator. It's the best way to make this stuff stick. Now, go crush that exam. Good luck.